Good afternoon, ladies and gentlemen. Welcome to the Standard Global Leadership Center, this very, very stunning venue, for the second stop of Semaphor's Next 3 Billion On Tour event series. We're honored to be here in South Africa, where all eyes are on the country for these next days as it hosts the B20 and the G20 summit for the first time on the African continent. I'm Guillaume Doan, Director of Strategic Partnerships for the Middle East and Africa at Semaphore, the world's fastest growing independent news organization. Today, Semaphore has more than 1 million subscribers and bureaus in the US, Sub-Saharan Africa, the UK, and the Gulf. Our founding mission remains the same. We aim to provide our audience of global leaders with the most trusted news source in the world that bridges ideological and geographic lines. Our coverage of Africa is central to that mission. Semaphore Africa was created by Africans, for Africans, with a team of local journalists who draw on their experience and contacts to bring the kind of news that only comes with being on the ground and understanding the nuances of the continent. And today, we're very pleased to have all of you here for an editorially led discussion about the pivotal role that South Africa plays in advancing digital and financial inclusion across the region. As we've learned in previous conversations, there has been remarkable progress in the last 15 years. Bank account ownership has increased by 2 billion people. Most of that progress has been in Africa. This is promising progress as more people are connected to the global financial system, unlocking cycles of poverty. But still, 1 in 5 people across the planet remain excluded. There is a stark divide, regional divide, a gender divide, and a digital divide that must be bridged. This is why we're here today. South Africa has shown how it can be done. In just a few moments, you're going to hear from policymakers, business leaders, and innovators on how financial inclusion and digital connectivity can unlock the full potential of the next 3 billion people coming online. I want to take a brief moment to remind everyone that quality, independent journalism requires the support of great brands and partners. A big thank you to the Gates Foundation for their funding support for this series, and a huge, huge thank you to our partners and hosts at Standard Bank for their incredible hospitality and collaboration to bring us all here in this incredible, beautiful auditorium. To kick off today's program, I want to welcome Semaphore journalist Sam Kokeli to the stage for our first fireside chat in conversation with Sibisi Jonas, who is president of Ramaphosa's special envoy and also chairman of the group MTN. Take it away, gentlemen.
Hello, everyone, and welcome, Mr. Jonas. Have a seat to my left. I know you're not ideologically to my left.
Don't assume quickly.
Mr. Jonas, first things first, and we're going to put your MTN hat on, but we'll have a broad conversation about the world. South Africa is hosting the G20, B20. There's a whole lot happening. What's your take on where we are? And there's a missing country participation, and here we are. Is it interesting, your take?
Well, I think all of us will accept the reality that globally we are in transition. Probably we might quibble over where are we transitioning to. The reality of that transition actually is that there are strong forces against multilateralism generally. There are also strong forces that promote a particular kind of trade and approach to trade. There is weaponization of tariffs in that process and weaponization of trade, so to speak. And I think the G20 in many ways is an affirmation of the dominant view globally, that multilateralism is crucial. It remains a central pillar of global development, so to speak, and has to be defended, so to speak. And as South Africa, I think we take a very strong view in promoting and supporting multilateralism and global trade that is free and so on. So that's the first point I want to say. The countries that have joined up in the G20 in the next couple of days are probably an affirmation of the importance of multilateralism and how we should continue to support it as a country, as South Africa, as it were. South Africa in many ways is a small country It's a small economy, but open economy. And it cannot survive closed. We kind of, if those who are older as I am, would recall that South Africa comes out of a period of isolation. And after that, that followed by growth, that was followed by integration of many of our multinational companies into global sourcing networks, that followed by the growth of our financial sector. And actually, we built strong regulatory environment for growing our financial sector, which is globally integrated. We cannot break out of that. And that's the reality.
But then how do we operate through this philosophy of multilateralism? You're talking about when we have these difficult relations. Already we've got the G20 carrying on. We've got a very strong partner to South Africa, the world's biggest economy. How do we, as South Africa, maneuver and move around that?
In the first instance, I always say that we need to avoid choosing sides. I think as an economy, small as we are, it's very important that we kind of realize that we are getting into a multipolar world with multiple poles. It's not a bipolar world, it's multipolar in character. And if we are to survive, we've got to ensure that we diversify our trade portfolio. So our trade policy, by its nature, must continue to grow what we have, in other words, our traditional trade partners, but it must also begin to look at diversifying trade and strengthening our relations with other countries where we have very little movements in trade. I mean, even the fact that South Africa is part of BRICS, if you look at trade statistics between South Africa and BRICS countries, it's very small. In addition to that, we also need to look at our trade policy, I would argue. I think we need to shift our trade policy towards a free trade approach, as opposed to the current approach, which is the investment treaties and stuff like that. I think there has to be a major policy conversation in South Africa that begins to move us in a direction of promoting free trade, as it were.
So when we diversify into thinking moving towards the east and the opportunities there, are they strong enough markets that will take up the goods, for example, that may have to be redirected from the US, for example, if, for example, AGOA fails, or it's tough to get things into the US market?
When I say diversifying, again, I'm saying you're not diversifying away from anybody. We have to strengthen our trade with the US, we have to strengthen our trade with the EU, but also I would begin to look at markets where we could be stronger. In Canada, we could be stronger, and we are not. In some parts of the East, we could be stronger, and we are not. So all what I'm saying is that we need to start thinking very seriously about a diversification strategy, underpinned, of course, by growing our productive sector, basically. Because I think, again, that's another area where I think we have deindustrialized over time. And I think we need to look at industrial policy and start thinking about rebuilding our industries. There were industries where we used to be competitive. We're no longer competitive. Part of it is because of the energy crisis we went through, but part of it is just sheer policy failure. And those are the things that we need to deal with. At the moment, I think you have a positive feel. Our equities are climbing nicely, and you actually are seeing a very positive. We've just been upgraded by rating agencies, and I think the business in South Africa seems to be, and investors in South Africa seems to be more positive about where we are. The government of national unity seems to be kind of like trickling better, performing better after the meeting. It seems to be quiet, at least for the last 4 weeks. I haven't seen stones being thrown from one party to other. And that creates an environment that is very useful and good for development. We have to build our own investment case as a country. And that actually, amongst other things, relates to trade portfolio that is widening. It also relates to the conducive environment for investment. It also relates to growing our productive sector.
What could we be doing as South Africa and also as Africa to ensure faster growth? I mean, countries like South Africa are in a low growth trap. What could we be doing for that, for growth, and also to narrow down access, make access easy, digital inclusion, narrow down inequality?
Well, look, in simple terms, I mean, low growth trap normally is normally a misnomer for a failed economic model. So to be honest, I think we need to look at the economic model that we have as a country. Part of that actually is recognizing that growth and output depends on a stronger and dynamic private sector. But for that to happen, you also need a strong and dynamic state. And the two needs to kind of work in tandem, in a sense. I mean, and I guess, I mean, we've gone through all this period that we've gone through where state capacity has been eroded, etc. But you can see in areas, in institutions where institutions are fundamental to that. If you don't, you have institutions that are independent, that are sustainable, that are capable, and that are capable in a sense technically. They can actually do the job. Then you have the basis for growth. And of course, the dialogue between the private sector and government. And I know that, I mean, part of the issue with dialogue with the private sector is also at a level of those who run factories. I mean, you can't have, councillors who don't know how many factories are in the city that a person is a councillor in. You can have, ministers who don't have a sense about which industries are growing, which industries are not growing. And you can't think that you'll reinvent the wheel and think that you are going to kind of go the route of huge, humongous projects that don't talk to the new economy that we're supposed to be building. So I'm just saying that there is the dialogue between private sector and government. I think I would argue. I mean, you've got ideologues of business, I argue, but I think it should go beyond ideologues of business. It should talk to those who run businesses and inform policy, and the government then interacts with them about their own thinking.
If you could rank, maybe you have a score of sort, how would you position yourself? Are you positive on South Africa leadership, the leadership question? I mean, I shudder to think what South Africa will look like when somebody like Sim Tshabalala moves on from what he does. I find him is a quintessential public leader.
He doesn't have space to move. That was a joke. It's a very interesting, but I'm more positive about South Africa, by the way. I'm more positive about South Africa. And I was talking to a friend of mine some time ago, and I think, and he was saying that part of the problem, if you think about it, part of our problem is that we've confined leadership to about, 3,000, 4,000 individuals. And if you think about it, they interact amongst themselves, they cross-marry, they do all sorts of things. And I think if you go beyond that group, there is leadership, depth of leadership in this country. And we have to kind of find a mechanism of releasing the youth leadership, which is there. And as it were, I was looking at our Minister of Communication with all due respect. Think about it, you know what I mean? And if I was in my village, I would call him something else. But he's very dynamic, he's very strong, and it shows that there's new leadership that comes. So that exists, and we must find it. The other part is that we need to shift away from old politics, I think, because part of, again, we're stuck in old politics, liberation politics. We have to look at where the person was arrested, where he kind of was trained in militarily, etc. So we've got to break the ceiling and open up this political space in South Africa, and the opportunity exists. That's why I think I was amongst those who really bemoaned the weakness of the GNU, because for me it offered an opportunity where you could have a different mix, and where you could have deracialization of South African politics, where you could have a potential of bringing back non-racialism in our politics. And I'm saying it had that potential. We have to open up our politics. To be honest, I think ideology is important in one way as a philosophy, but I don't think it's what determines what happens in any society.
What's at stake if we don't get this right?
Look, populism is on the rise. If you don't address growth, we don't show visible signs of addressing inequality, populists will take the center stage. as it were. And populism is nice because it offers, for complex problems, it offers simple solutions. And that's the nice thing about populism. It just doesn't really look at consequences. For very complex problems, it offers very simplistic solutions.
What would that look like in South Africa's case? And in what cycle in our politics? When?
Look, I mean, it's very clear. I mean, we kind of reluctantly, the country is drifting into what I would call a post-liberation politics era. And I'm saying reluctantly, and you can see the resistance of that. I mean, there's almost like, so the country is almost, the citizens are dragging us into that era with a huge resistance, so to speak. And I mean, those who still talk about history, their history, etc., will be left behind, I think, because I think people are thinking about what the future will look like. And it's already there. We're there. I think we're there. And it's a matter of realizing that we're there and starting to act in a manner that we realize that. By the way, we're supposed to talk about financial inclusion.
It's so fascinating to hear it. I would imagine that
that's what I'm paid for.
I think you enjoyed it too much. At MTN, I would imagine financial inclusion is one of those things that you guys are driving. Are there particular things in terms of policy that you want to see across the continent?
Yeah. Look, I mean, firstly, I think, I mean, the opening speaker was right. Huge progress have been made globally on financial inclusion. And I mean, in many parts of the continent, whether you're talking Ghana, Nigeria, etc., there's been huge strides in financial inclusion. In fact, I think the stats says about 79%, I think, inclusion happened globally, as it were. So, but there's still significant people who are outside of that. I mean, I think it's 1.3 billion. I'm not good with numbers, Sim. But I think let's acknowledge the progress. South Africa has always been better, actually, if you think about it. We probably have universal inclusion in South Africa. I mean, you know, and so if you think about most, 98% of South Africans have bank accounts. That's like a huge thing. Of course, I mean, I hope Sim will agree, that has been driven pretty much by SASSA grants, effectively. But it has created an atmosphere where you have massive inclusion, so to speak. So that's, I think, something that we must acknowledge. Of course, the weakness is that what many people call mailbox syndrome, that many people actually have accounts, so because the wages get into the account or the grant gets into the account, but in the afternoon they withdraw all that money and go back to the cash economy and pay in cash, as it were. So it's something that I think we have to deal with, that paradox of inclusion at a scale that we have, but at the same time, the actually use of the digital use of financial digital experiences are limited. So that's something that we have to deal with as a country. The second, of course, part is that in many parts of the continent, connectivity is widespread. I mean, when you think about networks in the continent, I mean, even in smaller countries, you still find 70% connectivity, 80% reach of networks reaching, etc., etc. So you would argue, again, in South Africa, again, the same thing. People have massive access to networks. I mean, but of course, the use is something else. So there's a gap between the infrastructure, the digital infrastructure that we have, and the use of that infrastructure that we have. Again, that's something that we have to kind of find means and ways of dealing with it. And how do we deal with both? My argument is that I think partly there are two critical elements in this thing. The one is trust issues. The second one is affordability.
I'm afraid we've run out of time. Thank you so much.
We started with politics.
Thank you.
Thank you very much, Mr. Jonas. Sam, I'm now pleased to introduce Sim Chabalala, the CEO of Standard Bank and our venue hosts, to join me on the stage. I will break out of my MC role for a few minutes, and I promise we'll talk more about financial inclusion. I should say, well, make yourself at home, but you are home.
Yes, indeed, Guillaume, and welcome home.
Thank you, thank you so much. Most people here, I'd say probably everybody, knows who you are, so I'm going to be telling them things that they probably already know. But you are the CEO of the bank, the largest bank by lending assets in Africa.
Yeah.
Which is a
200
wonderful thing to have on your LinkedIn profile.
It's not my money, but it's $200 billion.
Which is a tremendous size, and you've been called the Jamie Dimon of Africa.
No. Jamie Dimon is the Sim Chabalala of the United States.
Well, I know that you're going to New York very soon. You're going to have to tell him in person. We were really here to talk about fundamentals. 200 billion in lending assets, but also 20 million retail customers across the continent. This is really where connectivity starts. Standard Bank's been a central player in Africa's financial inclusion for many decades. But how do you see the next chapter of financial inclusion taking shape?
It's great that there are partners here, so MTN, Mcebisi, and Salvador from Octavia is here, and I'd like to tell that story. I won't tell the MTN story because I think it's well known to most people here, but Octavia is a very interesting entity. It's formed in 2012 by a Nigerian Lebanese gentleman who has a vision, and it's about inclusion. Accelerate to 2025, after having been provided capital by way of equity and loans by various private players, the entity lists on the Johannesburg Stock Exchange a couple of weeks ago, and it goes public. What's the validity? What's the point of that story? It's a case of a business involved in financial inclusion that is built by people who understand the market, funded privately, and then goes public. But here's the thing. It's in over 33 countries on the African continent. It has got 121 million users. And it is a platform on which Octavia acts as the conductor of the ecosystem between tech companies and other partners, including banks, to provide people with nano loans for their daily needs. I can't think of a more quintessential story of inclusion, because it's a combination then of technical capability, IT, software, infrastructure, soft infrastructure, human beings, providing them with financial products to meet their daily needs by way of nano loans.
And born in South Africa?
No, born in Nigeria.
Born in Nigeria?
Yeah.
Apologies. But turning on the technology side, how is Standard Bank leveraging that technology to further engage with its customers?
A colleague of mine once said that a financial institution is simply a tech company with capital attached to it, because fundamentally you need to use technology to provide people with banking products. But if you go back 4,000 years, banks have done precisely the same thing as they are doing today. They took deposits, they advanced loans, they provided people with capital, they provided them with the ability to pay, and they provided them with risk management products. They did it on a plank, which is why the Italian name for it is banca. The Greek one is trapezia. It's a plank, which is the technology. I offer to you that tech in the nature of MTN, all the telcos, the hardware and the software is simply the infrastructure that you need to provide products and services to your clients, which is to give them the ability to make payments, to have access to liquidity when they need it, capital to buy a truck because somebody is involved in logistics, and so forth. So we spend a vast amount of money on technology. The second biggest cost in our group is technology. And there was a time when the intangible on the balance sheet was massive at Standard Bank because we're investing in the core banking system. And we've now been increasingly investing in the front end of the business to meet customers' needs. in response to competitors. The one statistic I want to leave you with, and then I'll hand back to you, is 99% of our customers are now on digital platforms. People no longer go to branches. We got hundreds of branches in South Africa and in places outside South Africa, but most people use the mobile phone.
And what about people, the last mile, people who are excluded from the financial system? How do you harness technology to reach them?
In partnership with Octavia and MTN. It's just very, very hard to go that last mile. You need the technology to do that, and you have to do it in partnership. You cannot do it with bricks and mortar. You can, it's just too expensive.
Africa's economies are becoming increasingly connected, interconnected. But how do you see financial institutions like Standard Bank driving cross-border trade, investment, and inclusion, but at scale?
So the continent requires about $3.4 trillion in infrastructure in the next 10 to 15 years. I mean, investment bankers can argue about it, but it's a vast amount of money. And the African continent just cannot raise that money itself. The other way to think about it is that conservatively, for infrastructure, we need about $100 billion per annum. We can only raise about 65 with our own resources, and we need the rest from other parts of the world. The role of banks in that context is to try and mobilize the money needed for that by putting together partnerships between development finance institutions, philanthropies, and banks, and finding innovative ways to provide that funding. A large part of it has to do also with advocacy. One of the things we're advocating for during this week, for example, is a reduction in the risk-weighted assets that banks have to hold against African projects, because we don't require that amount of capital. The maths just suggests that we need to hold about a third of the capital that we hold as Standard Bank, for example, for our projects. If we're able to reduce that by a third, we could lend 3 times more to these projects than we currently do. The same applies to insurance companies. The other part of the argument that we're making to make it possible for us to make these investments is we're arguing that ratings agencies need to get their act together and apply appropriate risk weights to African projects. In the case of South Africa, for example, we think, in fact, we don't think, we've done the calculations, we are ranked 4 rungs lower than we ought to be. We're at, we're at double B minus, we should be at triple B. If we were to be rated at triple B, it would save our country, Minister, 50 billion rand per annum. Think how many schools you could build with that, or how many bridges you could build. And we're making that case. We think we are being heard. It's a slow process, but we think we're being heard. We're arguing for greater integration of the continent. We support the AfCFTA. It should be easier to make payments across the continent. It should be easier, for God's sake, to move a truck from Lusaka to Durban instead of it taking so long. It should be easier, again, for God's sake, to move stuff out of Durban Harbour so that you don't have so many ships avoiding Durban and going to the Seychelles or Mauritius and so forth. We're arguing that Agenda 2063 should form part of the agenda for the African continent as it negotiates with the rest of the world, whether it be the GCC, China, Japan, the United States, or the EU, and actually actions the commitments in Agenda 2063. Those are important for us as bankers to motivate for, because it gives us the ability to make payments across borders, move money and capital around, or data. Just one last point. Most countries want data sovereignty, so they want to hold the data in country. Well, that's great for the sovereign, but it's not good for the movement of capital and data between countries. It's just more expensive, more cumbersome, and makes it difficult to make payments.
As you know, these discussions are really about connecting the unconnected. 3 billion people worldwide who lack access to mobile broadband. But a lot of progress is happening at incredible speed. And in fact, if we're successful, we should rebrand this to the next 2 billion by next year. But, what signs of optimism are you seeing out there about specifically the potential of Africa to shape the future of digital and financial inclusion?
Again, I've used these two great companies as examples, and they're not paying me any fees. In fact, they're refusing
I was
to.
thinking about that.
They're negotiating the fees and commissions very, very hard. So I'll refer you to those two companies again. That the partnerships necessary to include more people are easy to put together because these capabilities exist. There is no reason to believe that the convergence between telcos and banks is not going to continue, but we each are going to have to be playing in our own lanes.
Just to conclude on kind of a more big picture discussion here, you're the chair of the B20 Infrastructure Task Force. You've really helped shape the global conversation on investment in sustainable infrastructure. You've been a champion even long before that about the need to attract more capital to the continent to invest in critical needs like infrastructure. Can you just say more about that, about those long-term capital needs into both physical, digital infrastructure, and what role the private sector can play in shaping that?
Let's start with the first set of recommendations we make. The continent needs a lot of infrastructure, but it's infrastructure that is very, very helpful for the world. Think about it this way. The single biggest issue facing humanity remains climate change, and we do need a diminution in carbon emissions. But the world needs data centers, artificial intelligence. But these massive data centers need vast amounts of copper. Well, we've got the copper belt. They use huge amount of electricity. A Google search versus an LLM, an AI search, the LLM uses 10 times more power than the Google search. We had 500,000 data centers in 2012. We now have 8 million. They use vast amounts of power, vast amounts of copper. We've got vast amounts of copper on the continent. We've got vast amounts of geothermal in East Africa. We've got vast amounts of wind and solar in the Western Cape. We've got the knowledge, skill, and talent in the Western Cape and in Kenya. Well, how about the world builds data centers on the African continent? It'll be, for those South Africans who are here, simpler, better, faster. So that's that's the first one. The second one is once you've identified those projects, how do you recycle those funds? Where do you get the money from? From excess units in economies to the deficit units which require this capital and liquidity. We've made a series of recommendations. They include changing the mandates of development finance institutions. For example, the World Bank still refuses to give guarantees to countries rated BBB-. In fact, they've changed that rule, but they used to refuse to do that. Guess what? That excludes the vast majority of African countries. In fact, it includes all of them, including the mighty Republic of South Africa. So that needs to change. So the mandate of these institutions need to change. The way they design their products need to change. The way they use rating agencies' ratings needs to change. So they take the BB- that the ratings agencies give to South Africa, and they'll reduce it by a notch or two lower, just to be conservative and have a buffer. So those things need to change. We need to change the rules, as I said, in Basel, to make it easier for financial institutions to lend into these projects. We need to change the rules that relate to the way in which countries interact with investors and ratings agencies, because countries too have a role to play. They should be more transparent with their data, be more sophisticated with their investor relations, improve monetary policy, improve the independence of central banks, let the currencies float so that they're tightly linked to the economy. And lastly, once the money is moved from investors into projects, it needs to move into the economy. There are many recommendations, but the one that I think is the most important is put in place mechanisms that make it easy and quick to pay SMEs. At the moment, it takes far too long. So include SMEs in the value chains and have networks and systems that make it easier and faster to pay SMEs.
That's tremendous. I think sadly we've run out of time, but Sim, I think this was your 4th time on the Semaphore stage. I think you deserve some kind of medal for being in the Semaphore Hall of Fame, and thank you very much again for hosting us here.
Thank you very much, Kevin. Thank you.
Thank you again, Tim. Joining us now for our headliner interview is the Honorable Sali Malatsi, the Minister of Communications and Digital Technologies of South Africa. He will be interviewed by Semaphore Africa editor Yinka Adekoke on how South Africa continues to lead the continent in financial and digital inclusion.
Does it matter? Okay, it doesn't matter.
Minister, thank you so much for finding the time to do this. I know we've been talking back and forth for a couple of years now about working with Semaphore. Very soon we too will get you in our Hall of Fame, like Mr. Jabalala as well.
At least I'm on 2, right? This is my 2nd one.
Yes, yes. But I wanted us to, first of all, just talk a little bit about digital divide. Clearly, South Africa has made huge progress, as Mr. Jonas was saying earlier there from MTN. But the issues of data affordability, device affordability are still sort of difficult issues to really reach to everyone in the country. And I wanted to hear about your strategy, how you're thinking in terms of reaching the widest number of South Africans, and to really take part fully in the economy.
Absolutely. And the best foundation is to always acknowledge what has been done well. And that is to start with recognizing that, of course, incredible efforts have been made to get more South Africans connected. The telcos have played a major part in that aspect with the wealth of investments that have been made in terms of the infrastructure and the networks and getting to as many South Africans as possible. But of course, for as long as you still have parts of the population outside the borders of digital connectivity, that is always going to be frustrating, because we live in the era where access to broadband connectivity, unlike 20 years ago or 30 years ago, is such a key ingredient of our daily lives. And it shouldn't be the norm that you have, despite all the investments that have been made, that you've got almost less than a quarter of the population outside of those borders. The infrastructure element is the first one. Then it's about the meaningfulness of that connectivity, because connectivity on its own is insufficient. It has to be meaningful, and that's why globally in all these platforms around digital connectivity, Brazil, for instance, during their G20 tenure in the Digital Economy Working Group made sure that they put a spotlight on meaningful connectivity, because unless that connectivity is meaningful, we are not going to fully extract the value out of it. A lot of economic activities is shifting towards the digital, right? Notwithstanding that element of connectivity. And I think, as Mr. Jonas mentioned, in the South African context, for instance, you've got over the figures are 80% cell phone penetration in the market, which means that on average, every household has a smart device, right? They've got access to that. That drives activities in there. But there are still barriers to that entry, and affordability is a major hindrance to that. And this requires that, and I like what he said about just a pragmatic approach to solutions that can work. And that means everyone in their different roles, because there are a lot of codependencies from a policy perspective and execution in terms of getting to those solutions. In the South African context, for instance, smart devices are classified as luxury goods, right? They carry the ad valorem tax, which drives the cost of that device. when we began having a conversation with the Treasury and the South African Receiver of Revenue, and to their credit, because no revenue authority is going to entertain a conversation about how you minimize their pockets, right? But you have to present a case that showcases what is the ultimate benefit, right, to having more people active in the digital economy and the opportunities it may open, be it in e-commerce, e-banking, or even in terms of e-learning. And those benefits, I argue, far more outweigh what could be surrendered in the form of collections of the exercise duty on smart devices. So the first step, and it's a very symbolic step in the sense that it's about the entry market smart devices, where the National Treasury eventually considered to the removal of that. What then does is it enables in mostly low-income households to then start having those devices. Now we have to address the issue of the data, because data continues to be unaffordable, particularly in comparison to the average income per household. But this requires a holistic approach, as I said from the onset, because no one action becomes a panacea to all these challenges that you're saving. Of course, I'll always be of the view that the telcos can invest more in that, but you need the activity in the market to do that. And for us as government is to look at the regulatory hurdles that may be frustrating them on their part to expand that. The ultimate benefit, in my view, and as someone who comes from a village and still is based there, I don't want to feel that when I'm here, the level of connectivity I have makes us elitist in the sense that it's guaranteed, it's uninterrupted, but when I go back home, it's a different experience because it ultimately impacts my productivity as an individual, and there are so many others that impact that. So that's why I say it requires a holistic approach to that, so that the ultimate benefit is for the over 21 million South Africans who are outside the borders of digital connectivity, how do we bring them in? And we have to look at all of the solutions. I think fiber has gone as far as it could go in terms of expansion of broadband connectivity. I think there's a global conversation about the appropriate embracing of low orbit Earth satellites, and I know it's a conversation that titillates a lot of people in the South African context, but we gotta look at how do we make sure that we ensure that there is regulatory fairness in recognition of the fact that there are players who have been in the market who have invested a lot of their capital and continue to play that way, and ensure that there is equally no regulatory rigidity to the solutions that the times we live in insist on us to embrace.
I mean, to that point, as you think about reforms, in order to attract more investment into South Africa, particularly in this space, how are you thinking about those reforms if you're trying to attract these multinationals and international companies? You've mentioned satellite there. Obviously, people automatically think about Starlink, but it's not just Starlink. You're trying to bring in other companies as well. How are you thinking about the reforms? What can be done to enable this?
Look, I think it starts also with so there are multiple approaches to this, one of which I touched on is how we approach regulation. I think for every government, the temptation is to always leverage regulation for compliance purposes and not position it as an enabler for the sector to grow, right? So let's start with the domestic considerations. I think the onerous processes, for instance, for the application of an individual license or a class license, you can start with there. The approvals for way leaves, which are very unique when you go to different municipalities in the country. And the frustration that the sector sits with is when it interfaces with government, whether it is local government, provincial government, or national government, it is still one government in a way, right? Because you are still dealing with the mechanics of interfacing with the bureaucracy. So it requires a harmonization of all of that so that the cost of going through the regulatory elements don't end up frustrating business. The second part is, as much as we are a unique country and as much as I think South Africa will always have an appeal, we are not the only market that is trying to attract all of these investments for instance, particularly the digital investments that our economy needs. If you look at how Kenya, for instance, is positioning itself, the inroads that Rwanda is making, including even Nigeria, they are positioning themselves to compete with South Africa. And you may find that in some elements, their regulatory dispensation is much more adaptive to the market. I'm fairly a young person, so I don't have the guarantee or the luxury of thinking that we'll be in government forever, right? So we have to act with the speed about the time that we are in and say the solutions that require us to act now means that we have to relook at regulation. What does that mean specifically? It means that we take the approach that this sector, the ICT sector, is the bedrock of so many other sectors.
Yeah. That's why you're here.
Right. Absolutely. It's the bedrock of many other sectors. If we suffocate it with unnecessary regulation simply because a ministry must feel very powerful or the regulator must feel very important, then we are going to miss this unique opportunity that I think South Africa has, which has been imposed on us by the will of the people through the formation of this government. And we may never seize it again. And I don't want to be part of, the lost opportunity that we currently have as a country and as a government. And holistically coming to the issue of multinationals, because what we must also be very vigilant about is a misperception of creating a sense that you're creating regulatory exemption simply because you want to attract multinationals. I think the credibility of any regulatory regime lies in its consistent and fair application towards everyone. But we have to look at all the instruments that we have, right? And one of the debates that is currently happening in the GNU is also around how we look at leveraging more of our empowerment regulations to position those better, recognizing how far they've taken us and some of the associated weaknesses that have emerged over a period of time, and then take the approach that we have to have that consistency across the board. We don't have the guarantee of time or the luxury of thinking that we'll still be around in the next 5 years.
It's interesting. So you're not. Have you given yourself sort of a deadline as to when to make decisions on this? To make a decision as to when this question will be resolved or go away or some sort of.
It's a permanent conversation. It's a permanent conversation. But we have to take the right steps in the right direction. I think one of the conversations, particularly the sector that I'm in, is grappling with is in recognition of all the challenges that exist, particularly, I came here with a particular view of what your questions would be, so it's very refreshing to hear the disposition that you are taking. But we have to look at what are the best instruments that work for the South African economy and where it is right now, and also for attracting the digital investments that our economy needs. To enter the South African market, right, there are several points of entry, one of which is selling 30% of your ownership to locals. There is also the avenue of equity investment programs, and there's been a fair observation that we need to make sure that to the extent that those that are in the market, let's also measure their impact. So that we don't create another pathway that seems to be like a cosmetic element of empowerment, because this question is always going to exist. So we have to, in a way, release ourselves from the attachment that so many in the public discourse have around old ideas.
You're talking about this beyond just this digital ICT space, right?
Yeah, I think it cuts across. I mean, the digital space is just one fragment of the space that we are in. Yeah.
To bring it back to digital, the future for this space, the future for many of our economies, all of our economies, is, we're often told, is artificial intelligence, right? And I'm interested in how you're thinking about it for South Africa. Because the question for so many of our countries on the continent is, are we just going to be consumers of whatever is given to us, or we buy from the West or from wherever we buy China? Or should we, are you working on a strategy, and how are you thinking about how you protect, South Africa's digital sovereignty and also enable the economy? And again, we come to the biggest problem that we have, not just in South Africa, but in so many countries, which is employment.
Yeah.
That's the conversation even in the United States, in Europe, wherever that jobs will go away. How are you thinking about it, just in broad terms?
How much time do we have?
I know, we've only got about a minute left.
Look, I think our approach is that we should be less of a dependent on what has worked elsewhere, because the reality is Africa and South Africa has its unique features, and one of which is our cultural diversity. And we should be mindful of perpetuating the digital divide by not making sure, for instance, that AI embraces local languages, because then you run the risk of, again, leaving so many other people, because if the large language models are only in one language, then you are excluding a whole lot of other people. I think the conversation around the ethical use of AI is one that will forever be vigilant about. I'm a politician, and one of my immediate worries, particularly as you go into election years, is the emergence of deep fakes and the spreading of misinformation that dilutes the space. Equally so, and I shouldn't be the politician that drags the time, but I think equally so is the aspect on the digital skills of our population. And I think that's going to become, and it's one thing that we're investing a lot of resources towards that and building partnerships with the private sector, because a digital skilled population is far much stronger in terms of how it can best extract the opportunities that lie there in the digital economy, and can also effectively use all these new technologies that exist, including artificial intelligence.
That's the hope, that we do this across the continent. Minister, thank you so much for an excellent conversation. Thank you for finding the time. Please join me. Thank you.
Honorable Minister Yinka, thank you very, very much. And now we move on to our final session for today. I'd like to welcome Semaphore Africa Managing Editor Alexis Akwajiram to the stage. He will lead a panel discussion with Anne-Marie Chidzero, Chief Investment Officer of FSD Africa, Carl Wazen, Co-founder and Chief Business Officer of Yoko, and Salvador Anglada, Group CEO of Optasia. This esteemed group joins Alexis to discuss how a new wave of fintechs is rewriting the rules of money. This panel dives into the innovators building rails, connecting markets, and powering the next billion digital transactions.
Well, thank you. Thank you very much, and good afternoon. Thank you so much for joining me. I wanted to start broad here. We have built all of these conversations around financial inclusion. Anne-Marie, as an investor who takes a broad view of the financial ecosystems across the continent, I wanted to ask you, in your experience, how can fintech companies drive financial inclusion?
Thank you very much, and it's a pleasure to be here. And gosh, after such an eloquent speeches beforehand, this is a real challenge. So I'm going to speak from the perspective of the African financial system. So we have a huge continent, and our continent, unfortunately, is fragmented because we have 54 countries, 54 jurisdictions, regulations, legislations. And in order to unlock the potential of our continent, fintech, which is driven by technology, is part of the solution. So it's really about thinking about fintech as rewiring, to a certain extent, our financial system. So the digital platforms, and we heard from the chairman of MTM, the mobile payment system unlocks the ability of entrepreneurs to create platforms where they can connect people in the last mile, in the rural areas, et cetera. For example, pay-as-you-go solar systems that can connect rural communities to solar, to energy. But at the same time, they're using these platforms to make payments. And so the more we expand the technology, the more we enable that technology, the more we can apply the business models that will integrate, that will create more inclusion in our economies. So whether it's improving access to health, whether it's energy, whether it's financing an SME, all of that data then becomes the power. So that's what's going to drive the ability of the financial system to be more efficient in the way it allocates capital. So the technology, the data enables us to better understand risk. So that's all, it's all connected to some of the challenges that we face around perceptions of risk. So the more data we have, the more we can price risk, the less uncertainty there is. So I think it's important to think of fintech and this $3 billion as part of the engine that's actually going to contribute to the whole system.
What are the biggest challenges that affect that engine?
There are many challenges. I think regulatory, so enabling cross-border payments. So enable, the ability for commerce, for SMEs to be able to, operate across border, to trade across border. So cross-border regulations, trying to open up those corridors. Data sets, unfortunately, don't talk to each other. And so how do we integrate the data sets from these different technology providers? Just getting the adoption of our financial institutions using that data to assess risk and then to enable the financing to these SMEs.
I mean, I'd love to bring in Carl at this point because you've mentioned SMEs on multiple occasions. Just in terms of what you do, I mean, my understanding is you help around 200,000 SMEs to get paid. Can you talk us through the journey that you've had as a business and also the challenges, how you've tackled the challenges that Anne-Marie's mentioned?
Yes, thank you very much for having me. And I think it's very interesting. We started roughly 10 years ago, so we're 1 decade in. Today, Yoco is a payments and software platform that is singularly focused on one thing, and that is to help South African small businesses to grow. So that's our focus. That's what we wake up to do every day. And essentially, we do that through 3 main, categories of products. So the first is payments. So payment acceptance, roughly 200,000 businesses that accept payments through our card machines and online payments today. So roughly 1 in 2 South African adults have paid on a Yoco terminal last year. And most of those, or roughly 80%, were previously cash only. So I think that speaks a little bit to the inclusion bit. The second piece that we do is really help businesses digitize their workflows. So at the moment, most businesses that we serve were previously using pen and paper, right? For their workflows, that means selling and stock management and staff management and reconciliation and all that. So really digitizing that through our point of sale tools, through our data and dashboards, etc. And then the third piece is our working capital business. So we have a merchant cash advance business that has dispersed roughly 5 billion rands to our merchants over time. And for most merchants, this was their first loan. So really strong, inclusion theme and strong access theme. And I think the fintech piece for me is really crucial here because when we came into this market, we came from the telecom space, so me and my co-founders, and we had a very simple idea when we looked at both industries. Why was it possible to get a handset and a SIM card and get activated on the spot in a telecoms world? But in merchant acquiring, which is what we do on the card acceptance side, you needed to wait 2 to 3 weeks. You needed to go through a whole bunch of things, and it didn't make sense to us. So we really tried to tackle all the, inefficiencies in the market. So most of that had to do with distribution, legacy technology, approaches to risk management, etc., that we were able to then just tackle one by one and end up, solving that one thing, which was payments at the time. But then from there, you build a daily relationship with these merchants, you build a community, and you start learning more about them, and you can then start offering naturally additional, whether it's software products or lending product, etc. And that really creates this relationships at scale with these small businesses that is very hard to do unless you're looking at it with a very, I guess, novel business model. And that cycle needs to kind of keep repeating itself. And yeah, grateful to have been able to do it here. And we're not a bank, so we're doing it in partnership with banks and in partnership with other ecosystem players. The consumer side of things was already quite well developed here, as we've heard.
And that's your journey to date over the last decade
Yes.
or so, and the cycle repeats, as you say. But what next? I mean, in terms of looking for future plans, expansion, what comes next?
Sure. Look, I think still very focused on South Africa. I think our journey, I mean, as we discuss these different categories, we've tackled, I think, payments in South Africa is largely digitized. Yes, there are still regions where it's cash only, but for the most part, I think we've managed to enable, in partnership with many others, of course, that digitization. I think the next layer that, as far as we see it, is helping businesses control, right, how they grow, and really giving them a single point of control that connects, I guess, all the data flows and all the workflows and all the money flows into one piece. And really doing that in partnership, with different ecosystem players. I think for us to win, nobody has to lose necessarily, right? We're doing it in partnership, and it's critical for us that we're able to build that important daily use layer that creates this relationship with small businesses that is very hard to do otherwise. And yes, of course, expansion is on the table. But we like to stay focused.
And on expansion being on the table, you mentioned you're still focused on South Africa. Any
Yes.
plans for expansion into other geographies?
No, 100%. It's not in the immediate short term. We're running a few pilots in smaller markets around South Africa, but still very much focused on serving small businesses here.
Thank you. And Salvador, I wanted to bring you in. First of all, well, congratulations. As we heard earlier, Optasia went public a few weeks ago. Same question for you, actually, because this will be something that people we're now watching what happens next. Tell us about the ambitions for Optasia now.
Well, maybe first, we don't need to explain much what we do because it was being properly introduced by the different people in the room. But I mean, we want to continue being the champion of financial inclusion. I mean, we are one of the largest artificial intelligence fintech platform in the world, and we provide. We are in 38 countries today. We provide service to more than 120 million customers. So what is next for us is. Even with that, I mean, if you think about the number of people that are unbanked in the world is 1.7 billion, so we are only providing service to 6-7% of them. So for us, it's about how we're going to double this figure, how we're going to be able to provide it to the next 130 million customers. And to do that, of course, we are only present in Africa itself. We are in 20 countries out of the 38. And the whole idea is in the next 3 to 5 years, how we can reach, 80% of the countries. This is what we want to do. Thinking about the wallets that we are operating, even in Africa, in the world, you have 300 wallets. We are only providing service through 10% of them. So achieving, more wallets, allowing us, to achieve and reach more customers is our goal. Another data just to finalize. If you think about the penetration of the wallets in sub-Saharan Africa, even if it's big, it covers 25% of the population, the active wallets. Only Kenya, they have gone to 75%. And out of that, in Kenya, 35% of the people, they are able to get access to financial services. So there is such a long way to go. I think we have the model. We partner, as it has been said. We use, distribution partners, mobile operators, the one that they have the customers and they have the data. We manage the data, and also we use banks, allow us to manage, to use their balance sheet, even if we underwrite 100% of the risk, but we use that. So building up these partnerships, extending those partnerships, reaching more wallets across Africa, because at the end in Africa, the wallets are a little bit the new, I wouldn't say the banking system, but in a certain extent they are covering a piece that the banks are not able to cover, the low-end part of the pyramid. And also the digital banks are not operating much in Africa, bit in South Africa, because the market is different and is well banked. But if you think about the rest of the countries, there is not smartphones, there is not smartphone penetration, the infrastructure is not there. So the way to create financial inclusion is to companies like us that has understood how to create partnerships, how to create ecosystems, and how to provide credit at scale.
And as you mentioned, artificial intelligence is baked into what you do. It's central to what you do. How important is AI in terms of building up financial inclusion at scale?
Well, I think it's everything. Well, I wouldn't say everything because as important as the technology is the partnership and the ecosystem. Both are the two main ingredients, but of course technology is behind all what we do. I mean, we collect data and structured data coming from different sources. We have more than 5,000 data points, and we use, we create features per customers. We recreate the behavior of people, how they're gonna, what's gonna be the behavior related to the credit, how much they're able to afford, and how much they're gonna able to repay, because we underwrite the whole risk. And all this has been done by the artificial intelligence, the algorithms. We use machine learning. We create this, have more than 200 algorithms across the different geographies. We have more than 1,500 credit limit models that all of them are based on artificial intelligence. We just handle all this data that are being produced, and it will reach and enrich all what we're doing. I mean, he mentioned what he's doing in the SME space. I would say it's the same. They are taking the data that happens because of the payments, and they will be able to provide credit just because of the information that we're taking. We are building up, an alternative credit scoring that allowed us to provide credit to the people that don't have any type of information. They don't have a salary, they don't have a salary slip. We don't ask for anything. All what we do is online, digital, and we are able to provide a credit in 30 seconds. We decided if you are eligible, and if you are eligible, we will provide to you that, and we will put it in your wallet, the amount to be spending whatever you think you want to spend.
That helps you to 32 million credit decisions daily.
I have to say 22,000 credit decisions per minute.
Okay. Your maths is better than mine.
Yes, yes, this is what we do. Yeah. But I hope that we will duplicate that. Of course, this is the goal, no? Duplicate.
Data. You repeatedly use the word data. It comes back to data and data being central. Anne-Marie, I know you feel passionately about data and the role of data and its use. Can you tell us your thoughts on this?
No, thank you for that. A very interesting panel this morning at the Bloomberg event. Sim was there with his colleagues CEO from APSA and CEO from Axis Bank. And a comment was made about the fact that there's a lot of, I wouldn't call it debt, but a lot of capital on the continent trying to find a home. Now, this data that we're talking about, our economies are made out of SMEs and microenterprises. The more we can capture them through this technology, the more we can generate the solutions that aggregate these portfolios of loans, in bundling them into vehicles that larger capital can invest in. So if we're really thinking about deepening our markets, technology, data is going to be incredibly important because it will unlock a lot of these solutions that then will enable larger pools of capital to move. And that's what we want to do. We want to unlock our own capital. We're sitting on 3 trillion of assets under management across the continent, from the pension funds, the sovereign wealth funds. We've got to find ways in which we can channel that into productive, real economy solutions, and the data is part of the solution.
And in a very real sense, do you see that happening? I mean, I know what we have to do, but I mean, are you seing examples of this actually happening?
Yes, we can see it happening. Securitization platforms, we're looking at one in Kenya that's using credit scoring in order to securitize the portfolios of microfinance institutions. This morning, again, there was somebody from a company called Yellow Card that's talking about stablecoins. One of the problems we have on the continent is just dealing with foreign currencies across 54 countries, right? How do we use stablecoins to address that? So I'm seeing that happening, and I think we have to think very futuristically. You know, somebody said, Anne-Marie, what's your dream? You know, if you have a dream, I see a dream where we are all interconnected, and that interconnectedness is the power that then fuels the financial system. So I think that's the future, and this gentleman from Yellow Card was talking about this notion of a bank branch, as Sim talked about. Forget that. You know, we need to think about those digital solutions.
I mean, to your point, so much of what holds back interconnectivity is the regulatory environment. So, I mean, this is one for you, Carl. I'm just wondering, what would you like to see regulators do to increase that interoperability, the interconnectivity that has been discussed by Anne-Marie, and just more broadly, to drive more financial inclusion?
Yeah, I think I guess the two main in our space initiatives that are happening on a regulatory front, I think are very important. So number one is a lower cost instant payments network for low payments called PayShap. So that's one I guess critical initiative that is underway. And then the other one is enabling non-banks, right, to play a role, right, in the money flow. So have access to stores of value, being able to participate in different flows of money, which will probably be contextually, more convenient for a small business, because it's not just about providing the access to the rail per se, it's about integrating that rail into their workflow. And small businesses, they don't really have time, right, to, manage multiple systems, or they actually want to do everything in one place, right? So in our case, at least, those are the two most relevant. But I mean, there's obviously lots. I think cross-border is another very big one. Yeah.
And this also makes me think. I mean, obviously, I'm monomaniacal about Africa. This is what I do. This is what we've spoken about. But we are looking at the next 3 billion across the world and looking at different markets. I know Salvador, you operate in the Middle East as well as South Asia. And I wondered, in terms of comparisons and where there are differences, how do the African markets compare to the other markets, the other emerging markets in which you operate?
Yeah, there is a fundamental difference. Is that the way that the market is evolved here in South Africa, the mobile money, the wallets, in most of the cases are in hands of the telco companies. Telco companies are the one that has deployed those wallets, and that helps to deploy the business through them. And you see the case of MTN that was here, VodaPay, Orange, Airtel, all of them are doing that. I'm not saying that there are not other players, but those are the fundamental players. When you look at Southeast Asia, are normally two different worlds. The business has been deployed through more super apps that are create an ecosystem of different services, allowing to collect the data exactly the same, and those data are the one that has been used to create credit scoring. So the approach in the market need to be different in our case, because always we look to partner first. Second, we need to find players that have customers, that they have data that we can use, that they have ways to disperse and collect. So we are approaching to super apps that they don't have credit capabilities. We're approaching the market also through digital banks that they are providing a lot of services, but not necessarily credit services. And we are doing that in Philippines. We are doing that in Indonesia. We're launching our first service in Malaysia. So different approach, but at the end, the partnership is there. Our capabilities always plug in between the ones that distribute and are close to the customers and the banks. The banks for us are absolutely critical, because the banks are the ones that provide the lender on record. We guarantee absolutely everything, but they're the ones that have the possibility to provide a loan, because at the end it's a regulated services. All what we do is regulated, is approved by central banks, and that's why we work always through the financial institutions.
Fantastic. I think we're going to have to leave it there. I could talk all day about this. Thank you so much for your time. And ladies and gentlemen, please join me in thanking our esteemed panel.
Thank you very much. Thank you.
Thank you very, very much, Alexis, our wonderful panelists, for really that valuable glimpse into how Africa is shifting from access to true participation. And a heartfelt thank you to all of you for being with us today. For those of you who don't know, Semaphore has really staked its future on convening, organizing events. We're doing about 70 events this year, but nothing really makes us prouder here than bringing this live journalism to Africa. We did our first event on the continent in Nigeria last month, and to be here in South Africa is really, really a point of pride. Thank you, Yinka, Alexis, Sam, for bringing our great journalism to the stage. We're really proud of our journalism and everything that we do every single day, and we invite you to subscribe to our email briefings, including Semaphore Africa. So please go to our website, semaphore.com, To do so, it's free. Thank you again to our remarkable speakers, your candid conversations, your unique insights and perspectives, and a sincere thank you again, Standard Bank, Gates Foundation, for your support, for your partnership and collaboration. Just to finish up, I want to welcome all of our speakers and journalists to the stage to take a little family photo. Thank you, everyone. We're serving a reception outside. Please be welcome.